Good morning, everyone, and happy Friday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. All right, guys, welcome back and thank you so much for being here. I'm still on vacation, so please excuse my temporary background as I take you on my little road trip with me. Now, we normally jump right into stock market news, but with the very busy earnings calendar this week, that news is pretty much all earnings reports, so there'll be a big focus on that this morning. Just before we get into all that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. All right, now let's dive into all of this earnings report news. U.S. stock futures are in the red this morning. Currently, the Dow futures are down 0.32%, S&P 500 futures down 0.73%, while NASDAQ futures are down 1.16%. These are being dragged down by some big tech names like Amazon and Pinterest, who have fallen following their quarterly results. Delivering solid second quarter results was MasterCard. Their impressive results can be attributed to the payment processor benefiting from increased domestic and cross-border spending. Their net revenue increased 36% year-over-year to $4.5 billion, beating consensus estimates of $4.33 billion. Their adjusted diluted earnings per share were up 43% from the same quarter last year to $1.95, beating consensus estimates of $1.72 per share. Analysts rate the MasterCard stock a strong buy with an average upside of over 13%. Also posting better than expected second quarter results was ST Microelectronics. The global manufacturer of semiconductor products reported their second quarter earnings per share of 44 cents, which more than quadrupled year over year and beat analyst expectations of 37 cents per share. Their net revenues of $2.99 billion also surpassed estimates of $2.89 billion and increased over 43% year over year. Analysts rate their stock a moderate buy with an average upside just over 14%. We also heard from Hershey's, who delivered excellent second quarter results driven by both international and domestic demand. Their adjusted earnings per share increased about 12% year over year to $1.47, beating the street's estimates of $1.43. Their quarterly net sales grew 16.5% to $1.99 billion, exceeding expectations of $1.83 billion. Furthermore, the company's updated their outlook for 2021. It expects net sales growth to be in the range of 6 to 8%, up from the previous range of 4 to 6%. Analysts rate the Hershey stock a moderate buy with a modest upside potential just shy of 3%. We also heard second quarter results from COHU. The provider of back-end semiconductor equipment and services reported better than expected results driven by strong demand for their mobility and automotive sectors. Shares did plunge over 7% as the company's revenue projections did not meet investor expectations. Adjusted earnings for the quarter stood at 89 cents per share, showing significant growth over the prior year quarter's adjusted earnings of just 17 cents per share and easily coming in ahead of analyst estimates of 79 cents per share. Their revenue came in at $244.8 million, growing 70% year over year and surpassing street's estimates of $242 million. Analysts do rate the COHU stock a strong buy with an average upside potential of 54%. We also heard from wireless network provider T-Mobile. The company reported quarterly revenues of $20 billion, up 13% from the same quarter last year and surpassing the street's estimates of $19.37 billion. The growth was primarily driven by an increase of 10% in service revenues at $14.5 billion. Their earnings per share of 78 cents denotes a significant jump from the prior year's figure of 9 cents per share, and it surpassed the consensus estimate of 53 cents. The T-Mobile stock comes in with a strong buy rating from analysts and nearly an 11% upside potential. Coming in with strong second quarter results was fast food chain operator Yum Brands. Yum Brands operates over 43,000 restaurants across 135 countries with brands like Taco Bell, Pizza Hut, and KFC. Their adjusted earnings per share increased 41% year over year to $1.16, beating the street's estimates of 95 cents. Their total revenues grew 34% to $1.6 billion, surpassing expectations of $1.48 billion. Analysts rate their stock a moderate buy with an average upside of just 2.5%. Other earnings expected to be reported this morning include ExxonMobil, AbbVie, and Procter & Gamble. The after hours, it does start to quiet down a bit. So let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by Atlassian. Trading under the ticker TEAM or TEAM, they're currently up nearly 12.5%. They're followed by Capri Holdings under CPRI, up over 8%, and Silicon Motion under SIMO, up over 7%. Our biggest losers this morning are led by Pinterest. Under the ticker PINS, they're currently down over 19%. They're followed by Cassava Sciences under SAVA, who's down nearly 16%, and 360 Finance under QFIN, down 9% so far. So that'll be everything for Friday's pre-market morning update, bringing you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button and say good morning in the comments down below. I always love hearing from you guys. Thank you guys so much for watching. I hope you have a wonderful weekend, and I'll see you back here next time.